Hey guys, and welcome to the Working Money Channel. Michael Branch here on Twitter. The XRP ledger is back on track to launch NFTs as the XLS20 proposal fixed and open for community review. So we just got some news here, guys, from Nick Bougalis here on Twitter, who is also a dev over there at Ripple. In a tweet on Thursday, the director of engineering at Ripple and author of the XLS20 amendment proposal, Nick Bougalis, revealed that a new version of the proposal incorporating a fix to the bug identified on Monday is currently open for community review. And so he posted this a couple of days ago. He proposed the 1.9.4 release, which incorporates the fix described below. The previously highlighted bug by Combat Conga was pretty simple to fix, apparently requiring a correction with a single line of code, and was coded by developers the following day. Notably, the new fix limits NFT holders from selling NFTs for assets that the issuer does not have trust lines for. So I talked about that news story a few days ago. Looks like now they are on with the fix. So the XLS20 platform, good to go. When asked about a timeline for implementation, Bougalis noted that it depends on how quickly operators update, while admitting that there is some upgrade fatigue. The developer expressed hope for a quick adoption of the new release. And so that's what he said down here, responding to "I must be new, LOL." on Twitter. So anyway, just some new news here with regards to that fix. Wanted to thank Michael Branch just for posting that. And Ripple's Swell is coming up, guys. Keynote announcement. We're thrilled to announce that Jorn Lambert, Chief Digital Officer at MasterCard, will take the stage at this year's Ripple Swell event. See more of our esteemed speakers here. And you guys can click that link if you want to see some more esteemed speakers. We know Ripple has a MasterCard connection, so it is no surprise that a CEO over there at MasterCard is going to be one of the keynote speakers. So the updated speaker list here from Winston Buki on Twitter, Jorn Lambert from MasterCard. We've got Derek Walton, Bank of America and head of GTS, Emerging Payments and Innovation. And Xiaochen Zhang, Amazon Web Services and Global Head of Innovation and GTM. So again, guys, you can link, all this will be in the description of this video, but you can go to ripple.com too if you want to see some of the speakers there for their upcoming Swell event. We've also got this, guys, some VeChain partner news. VeChain is really growing, and these partnerships are expanding, which gets me really excited about the VeChain cryptocurrency. It's kind of one of those underlooked cryptos because, it's right now it's trading at about 2 cents. 2.5 cents. It's kind of trading in tandem with the market. We haven't really seen too much with regards to, I've been keeping tabs on it, and I've been letting you guys know when I've seen some new developments in the VeChain or from the VeChain camp. In terms of a token though, pretty much moving in tandem with the rest of the market. And the good thing about VeChain, when it did see its all-time high back in April of 2021, we have seen it plummet quite a lot, 91%, over 91% since that high. To what it's trading at right now. And even if we were to go down to that ultimate low that we saw back in June of 2022, 93%. So good value here if you guys are looking for one of those really, really cheap crypto assets. Even just from where we are today back up to the all-time high, we are looking at a 1,110% increase, okay? So even if VeChain just goes back up to its all-time high, over 1,100%. If I bring up, let's say, another cryptocurrency like ADA, can we get to the same number there? So just kind of giving you guys some similar figures. So if I bring up ADA here, we saw ADA's top back in September. And since then, it has come down 85%. Okay, 85%. But if we were to just take today's price going back up to the all-time high, we'd only make it back up about 579%. And ADA is a great coin. Even if I take one of my favorites, Algorand here. I trade coins for two different reasons. I trade them in a spec market, find high-value, low-priced coins that have the potential for maximum profit, but I also keep coins. I'm also going to keep some coins on the side for future trading, and those are going to be the coins that solve problems. This one here, Algorand, stands to gain another 840% from this point here. So because of the low price point for VeChain, I think at this time we are seeing great potential for trading in a spec market. Nevertheless, I'm kind of getting off topic here because VeChain is also making waves when it comes to partnerships. They just formed a key partnership in recent times. In the latest development, the VeChain Foundation has entered into a strategic collaboration with Electai Consulting. The official announcement from Electai Consulting noted, Electai is glad to announce our strategic collaboration with the VeChain Foundation, the world's leading enterprise-grade L1 smart contract platform with an ultra-low carbon footprint and highly scalable blockchain architect. With our goals aligned, Electai and the VeChain Foundation will focus on developing valuable ideas and deploy innovative solutions to further enhance VeChain's smart contract capabilities. So not only is it a very, very attractive coin, and this is why I'm very torn with VeChain, because in a spec market, it can do really, really well. But I do also want to hold VeChain for the long term because the projects coming down the line, they are developing some really great things. VeChain developments and partnerships. There have been some key developments recently taking place in the VeChain ecosystem. And they mentioned VeChain Carbon. The carbon management SaaS system recently secured the Class 3 certification to provide its services to the carbon management SaaS industry. So interesting news here coming out of the VeChain camp, continuing to build. I'm not surprised considering how great this project looks. Wanted to thank the Cryptic Poet here just for posting that. Mike Manfield here letting us also know that SBI Group holds the highest number of security accounts in Japan. It has over 200 affiliates across 21 markets, spanning diverse business such as financial services, asset management, and biotechnology. And guys, MAS has now granted capital market service license to SBI Digital Markets. So SBI Digital Markets will be conducting regulated activities across advising on corporate finance, dealing in capital market products, and providing custodial services. SBI Digital Markets will be leading the way in capital market digital assets, building an ecosystem targeted directly at the growing demand for public and private institutional digital assets. And SBI partnered with Ripple, one of their biggest partners, so there's likely going to be a tie there. SBI Digital Markets plans to launch its proprietary digital asset securities platform, providing an end-to-end solution to help traditional financial service operators capture growth opportunities fueled by an advent of digital assets. SBI Digital Markets was created in late 2020 with the ambition of becoming a top-tier Singapore-based digital assets business for financial institutions. It is a subsidiary of SBI Digital Asset Holdings, which is a digital asset arm of the major financial conglomerate SBI Group. So SBI Group is the Ripple partner. They own, if I'm not mistaken, they own the largest stake in Ripple, or an outside organization that owns the largest stake in Ripple. So their biggest investor, outside investor at least, one of the largest Japanese private equity firms, SBI Group, also has the highest number of securities accounts in Japan. So as I mentioned, or as Mike Manfield posted up there. So now they're looking to grow, guys, in the digital asset sector specifically, moving from traditional banking, obviously that pivot, that shift, or rather the adding on of the digital asset industry. They realize, obviously, this is going to be a huge market. So now they've got an MAS license that will likely prove very beneficial for their bottom line. So wanting to thank Mike Manfield here just for posting that. Wrath of Kahneman also bringing this up, guys, with regards to Ebanks, who is a Ripple partner. They are expanding into Africa with an eye on mobile money. Africa's payment startups are about to face competition from a Brazilian unicorn. So they're coming in from Brazil. So they're a Brazilian company. Payment provider Ebanks has grown into a billion-dollar company with around 1 billion transactions completed in 15 countries. It carved a niche by helping global companies like Spotify and Uber receive payments from customers living in Latin America. Last October, it filed documents for initial public offering, or an IPO, in the US, though the process has been slowed down due to the ongoing economic downturn. But for their next move, the first voyage outside of Latin America, Ebanks is now launching in Africa, beginning with Kenya, Nigeria, and South Africa. So Flutterwave, move over. You are not the only game in town in Africa with regards to real-time payments that are enabled by RippleNet. But this is all good because now we're going to see real competition when the RippleNet players are competing against other RippleNet players. Well, what's their next move? So here they say this move seeks to tap into Africa's rising digital economy, driven by the rise of fintech companies like Flutterwave. Funny how I just mentioned Flutterwave. And so the CEO and co-founder of Ebanks, he drew a parallel between Africa's present fintech momentum and the state of play in Latin America in 2012, when his company was launched. But while Africa's fintech-powered digital economy is fastly growing, it is only in its early days and is projected to grow up and to the right for the next few decades. This is what he said in a statement. So looking like payments in Africa are ramping up, and Ebanks here obviously seeing a niche, obviously seeing that they can compete with other African fintechs like Flutterwave. Ripple-enabled Flutterwave as a great example. So, they are on a level playing field. Now it's going to be about proving to your customers that you are the best. And how are they going to do it? Well, there is the question mark. Anyway, interesting update there from the Wrath of Kahneman. Wanted to thank him for posting that. Now bringing us an oldie but a goodie, guys, from Wheezy at Nerd Nation Unboxed. Found this document through the Wayback Time Machine that no longer is on Ripple's website, and I'm interested on your thoughts on this. Now, what he brings up here, if you guys are new to the space, this might seem a little confusing to you. So he was wondering if this had to do with pre-allocation of XRP. The bank only has to hold its domestic currency and maintain one account with XRP. The bank only needs enough XRP on hand to service its largest expected payment obligations. Over here, he highlights this. Instead of holding local currency in Nostro accounts around the world, trading parties, banks or third-party market makers on behalf of banks, can hold XRP on their own balance sheets and use it to make markets with any other currency. The analysis in this paper is for a respondent bank providing its own liquidity to XRP. And then down here, compared to using Ripple without XRP, using Ripple and XRP eliminates up to 1 additional day of funding for Nostro accounts, saving up to 99% of related liquidity costs, as long as the bank has access to an RTGTS system, an XRP exchange that can support the necessary size of payment obligations. So he was wondering if this had to do with pre-allocation. Now, some of us in the XRP community have the benefit of being around for a while, and while reading the comments, I believe that some people here responded the same way. This had to do with Ripple's strategy before they introduced on-demand liquidity in XRapid. So they were toying with ideas, allowing banks to hold XRP on their balance sheets. But because of regulatory clarity, I mean, come on, let's fast forward to 2022 and we still don't have regulatory clarity in the United States. So because of these hurdles and because of these problems, Ripple had to pivot and, find other ways to provide liquidity. And so, they came up with lines of credit where you can borrow XRP for liquidity, or ODL, on-demand liquidity, where you're just using the liquidity provided by the exchange. So since then, we've seen all kinds of workarounds. Jungle Link here has said, pre-ODL, the idea was for banks to directly hold XRP, and it's still the best way. But due to volatility and regulatory concerns, ODL is a workaround. I think it was just the original strategy more than pre-allocation. And Tesla Gizla brings up a good point too. Soon, AMMs, or automated market makers, will hold the XRP and get a yield based off that volatility, eat up that XRP supply. So you and I, guys, the retail AMMs, the retail automated market makers. Crypto Nim down here saying, no, this was years back. When they determined banks couldn't and weren't ready to hold the asset, they changed course and introduced XRapid, which became ODL eventually. So Wheezy asking here, is this why Liquidity Hub was introduced? Yes, it was. They probably realized that it wasn't working. They had to pivot. They had to change their strategy. And so Ripple has come up with other options here that has helped change the course of on-demand liquidity. So it is an oldie but a goodie. We've got to sometimes go back to where we once were, and I probably did make a video about this 3 or 4 years ago. But you know what? It does not hurt to educate new people in the XRP community. This is an ongoing educational experience. At the end of the day, though, one thing remains true. I'm holding XRP. I do not regret one single XRP that I purchased. I'm going to be holding some for the short term, some for the long term. That's my plan, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.